Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Thursday, the 9th of April. Starting off with Amedeo Resources, where we've got this break of the 50-day moving average on a closing basis. 0.4 pence, the 50-day line shown in blue. We've been here before in terms of breaks and failures of the 50-day line in November and especially in February of late. If you're cautious on the shares, maybe wait for an end of day close above yesterday's high, 0.515 pence, or even the 200-day moving average at 0.61 pence, as that has been the main barrier over the last few months. The target, if we can clear the 200-day line, would be up to a penny, which is the top of a rising September price channel. This stage only back below the 20-day moving average, 0.34 pence, or this September support line, the floor of last year's channel, would be outright negative for the shares. MX Oil is a stock which I've been following quite closely over recent months. There's been a decent break of the 50-day moving average in February, and then the support points above it are very encouraging indeed. We've also broken this neckline here, neckline resistance 2.84 pence, and really while we're above that, one would expect an acceleration to the upside. Overall, the pattern here since October is an inverted head and shoulders formation, almost 2 pence deep. That's implying a 5 pence target, so is the top of this rising trend channel. And also you can see from the chart there isn't any significant resistance really between 2.84 pence and the high of September at 5.27 pence. So it looks as though MX Oil is well set up for the upside scenario. In terms of the stop loss, end of day close back below either 2.84 pence or the 10-day moving average now at 2.65 pence, according to your risk preferences. Next up is stock which has sort of always been bubbling around in terms of private investor interest, but it looks as though for also metals we've got a decent basing here over the last couple of months, at least 1 pence, the support area. What we're seeing over the last few sessions, though, is support intraday coming in around the 50-day moving average, 1.05 pence, and that's a decent end-of-day close stop loss as we look for further gains. A nice kink in the RSI oscillator window as well, which is normally a bullish sign. So then really we can say that while the 50-day line holds, we're looking for a top of October price channel target as high as 2.3 pence, 2.4 pence over the next month or so. Sacoil, a blast from the past in terms of the trading interest here, but a very strong push through the 50-day moving average, 1.36 pence. And what I like about this probably more than anything else is the way that the shares have filled this gap. It was at 1.8 pence, end of day close above it, 1.87 pence. So it's a gap reversal, and that should give the shares enough momentum to head towards the 3 pence zone over the next 2 to 4 weeks. Support in the first instance, obviously the gap at 1.8 pence, but then towards this 1.5 pence. That sort of looks like a reasonable risk reward in terms of going along with the shares now, or any dips towards that area and targeting the 3 pence area. Strategic minerals have been mentioned here before quite recently, but what looks to be in place at the moment is a bull flag based well above the 200-day moving average at 0.46 and even above the 10-day moving average 0.52 pence. That should be significant in terms of this consolidation being a mid-move consolidation, and we should be prepared maybe for a new leg to the upside. The target here up to the top of the 1-year trend channel, 1 pence, while we hold above the 200-day moving average, which is at, as I said, 0.46 pence. So a reasonable setup there for the bulls. Finishing off with Xtract Resources. This is a sort of a similar situation to what we're seeing at Strategic Minerals, but the bull flag here, the mid-move consolidation, rather more wild. The good news is, though, that you've got the 200-day moving average 0.16 pence as support initially. Also, one wouldn't expect the shares to fall back below this 0.13 resistance from February. Target remains 0.3 pence initially, which is obviously the big resistance from over the last year. And then hopefully after that we should see a decent breakout for the shares. But we've broken through a falling 200-day moving average, and that keeps Xtract Resources in positive focus. That's it from me. More updates at masterinvestor.co.uk.